My final guest on the show today is Nikhil Kamath, founder and CEO of Zerodha and True Beacon. Nikhil, good to see you again. As I was telling everybody, the budget was good maybe, but it got overshadowed by events in the afternoon. I mean, where is this Adani episode heading in your eyes? Because it's created so much uncertainty, confusion, even panic in the minds of investors.
Hi, Udin. Yeah, so today felt like, there's a India-Pakistan game on and India was actually winning, but TV kept replaying a Ranji Trophy game, which didn't matter as much, Budget almost became the secondary event of the day. Very hard to call, Udin, with Adani stocks. The one thing I would say, though, I think we need to consider someone not guilty unless proven otherwise. And, Hindenburg, the hedge fund, is not doing this from the goodness of their heart to inform people better, but they have a short position on the stock.
Of course.
So, whatever they say, I think I would take it with a certain amount of caution because they are bound to be biased when they profit on the downside of Adani.
That is, and they have not hidden that position. It's publicly disclosed. So there is no cloak and dagger situation out there. But do you think a position taken by one investor can roil a group of this size so badly? I mean, it's like saying somebody picked a stock and the stock doubled overnight, a very, very influential group. Or is there some smoke behind this fire or some fire behind this smoke? Otherwise, the market may not have reacted consistently for so many days like it has.
I think one will have to really research all of the Adani companies together to get to the bottom of it. But I personally have not put in that amount of work. But yeah, it does look unnerving to see stocks this large fall 20-30%. And whatever the resolution is, I think this volatility is bad for investors. A retail guy buying, subscribing to the FP, all of that. I don't think these moves up 20-30% or down 20-30% in either direction help many people. So I hope there is some kind of clarity which comes out of all this in either direction.
The year has not started well for India, Nikhil, and we were talking at an event and you were making the point that we are expensive relative to our peers and maybe some underperformance lies ahead, and January has been an underperforming month. Do you expect this year to be similarly volatile for domestic investors?
I would think so, even considering, notwithstanding the correction we have seen up until now, which has been, about 10%. On a relative basis, we are still more expensive to where we have been in our own past. But more importantly, I think we are more expensive than many other geographies across the world. So one wouldn't be hard-pressed in, if they had to call this side or that. I would pick the side that, markets will probably bring in a little more turmoil this year than a usual year by virtue of the frothy territory we sit on today.
And what are your expectations from the FOMC meet, and how crucial would that be in shaping market course for markets like India in the weeks and months to come?
So in many ways, we are at the mercy of the FOMC. I think when they increase rates, we invariably have to increase rates for many reasons, but also to protect our currency. It looks like they're slowing down. We'll have to watch the events tonight, but even if they slow down and they continue to increase rates, cost of capital, which has already run up so much, there has to come that point where that line is crossed, where people realize that putting money in debt and not taking the risk might be a better thing to do in the next 2 or 3 years. I don't know what that level will be, but I hope we're a certain distance away from it. But yeah, it will detrimentally affect us for sure.
Last 2 or 3 years, as you know better than most people, a lot of new investors have come into the market. Almost a new generation of investors have come into the market. New demat accounts, lots of SIPs. And this is the first real test for them. 1 year of practically no returns, and then a year which has started on a really volatile note. Do you think they will hold up?
if like account opening activity or traction in the market is a leading indicator, it looks like a lot of people have really slowed down. Also, I think many people have incorrectly set expectations for themselves by virtue of what happened in the last couple of years. Uh, let's assume Nifty long term does 10-11%. We had obscene returns in the last couple of years, because of the pandemic lull. Uh, I hope retail kind of like readjusts their goalpost to, target that 11% and not look for what happened in the near past to replicate in the future.
Hmm. But do you see any sense of disenchantment creeping in where people are either withdrawing SIPs or stopping SIPs, or high net worth individuals withdrawing from the market saying, no, I don't think near term it can beat fixed income, that kind of sentiment creeping in at all?
Not yet, I think, Udyan. I think it will happen at some point, but I don't think the 10% correction warrants it. People are talking a lot more about fixed income, albeit because of the increased return that people are able to get. If you're buying double A or double A plus paper today, you're getting as high as 9%, and it's becoming increasingly attractive to many HNIs, but they haven't reach the level of disenchantment which would make them, reduce equity exposure drastically yet.